Hello and welcome to the next part of the ABG Investor Day broadcast. My name is Torjus Loftheim and I work with Shipping Equity Research from the Oslo office. Next up to present is Concordia Maritime, a tanker shipping company with a fleet consisting of 10 product tankers and one Suezmax tanker. The company has been through a tough process the last year, but with the increased anticipation of an upturn in the tanker market, it will be very interesting to hear what CEO Kim Ullman thinks about the future and Concordia Maritime going forward. Kim, the floor is yours.
Thank you. Thank you very much for that introduction. And yes, this is a good opportunity to present Concordia Maritime after a couple of turbulent months, I have to say. Next page, please. Next again. That's the one. Okay, let's be conventional and go quickly through the key facts of the company, who we are and what we do and where we are in the value chain. So we're listed in Stockholm, been there since 1984, and Stena Group is the majority shareholder. Our current market cap is only 332 million. It's been severely under pressure, of course, after a number of bad years. And we are, as the moderator said, a tanker shipping company, and we're operating in the entire world around various routes. And we own 10 product tankers and one crude tanker. Next slide, please. And to simplify things and even quicker about take a look at our business model. Down at the left-hand side, you see the round ball, if you will, where he said purchases of vessels. That's of course very important to make sure that you purchase the right ship at the right price. Then you have to operate the vessels. You operate it in the market, in the tanker market, and you can do that in various ways. You can do it on the spot market or different kind of period markets that we can fix out for a number of years, for instance. And then the very important part, which is of course the sale of vessels, which is also part of the business model. So we come back to the sales of vessels a little bit later on in our presentation. That's the business model. If you change to next page, please, you can see, okay, where in the value chain are we? If you go from left to right, you can realize and see that people are extracting oil on land, at sea, or wherever it is, and it needs to be transported. And if it's not transported by pipeline, it's transported by big crude oil tankers. Then it goes to a refinery and you make products out of it. And then you have product tankers carrying these refined products. So these ships are a little bit more sophisticated than the crude tankers. And then it goes to consumption on the very right-hand side, and still 70% of the consumption of oil goes into transportation. And today, currently, we are nearly or close to 100 million barrels of daily oil consumption. Okay, next page. Next page is just a nice picture of the ships. It's the 10 P-Max product tankers that I'm coming back to in a bit, and a crude tanker. And we also participate in a number of in-chartered Suezmax tankers. Next page, please. Next slide. So the P-Max concept is, and I've been showing this for many, many years, but it's important to realize that the P-Max vessels are slightly bigger than the standard, what we call medium range MR tanker, which is also a product tanker. And we're transporting the same things, but we can, if the market allows, load 30% more cargo. So which makes it a little bit more flexible, and it could be quite competitive on price when it comes to freight per unit by this extra loading capacity. So then it's up to us to make sure that we find niche trades where this extra capacity can be utilized. So if transport economy on the one hand, next slide please, if you turn the ship around, you realize that it's a wider ship, and it's a ship that has 2 engines and 2 rudders and 2 propellers and has a safety feature in it. Okay, next slide, please. Currently, I said these special ships needs to be placed on niche trades where the extra capacity can be utilized. And currently, we have at least 6 out of the 10 in those types of trades. Next slide, please. We have recently gone through, over the last 2 years or so, quite a heavy investment program. We invested up against $40 million in dry dockings of 10 ships, 10 of our ships, where we also have had installments of statutory systems for handling and purifying ballast water systems, treatment systems. So the ships are now almost all of them done and out in the market, being just newly docked, just ahead of this expected upturn in the market. Next slide, please. So the earnings side, we need to make sure that we see a reflection on the earnings side against what we have invested in when it comes to a little bit more cargo capacity. And this picture is trying to show the fact that against a market index, a worldwide market index, we're at least above these general worldwide market indices. Next slide, please, which is just a flip over slide. We are now going to talk about the tanker market and its effects on Concordia Maritime. So let's stay with the next slide, this 13 that you're stop there. 13 is fine. The tanker market over the last number of years. 2015, if we follow my line of thoughts here, from left to right, it was a strong market. We had $25,000 to $30,000 per day at the peak during that period. And you can see the green line going through where it says break even for this similar type of ship, this MR type ship. And this is a general market picture. So it's not our returns you're seeing here. And so, okay, we had a good market in 2015 and started to go down in 2016, and then 17, 18, and 19, we had quite bad years, very bad years, well under the break even, as you can see. The reasons for that, we had high inventories, we had production cuts in oil, and we had a lot of ships being delivered. We saw this coming, and at this stage, we made sure that we had liquidity enough to weather the storm by selling 3 ships on sale leaseback terms, and that took us through these bad years. Then we expected the market to come up in 2019, and I know that we have been saying this for quite some, or at that time we were repeating that. And in all fairness, the market did not come up in the middle of 2019, but as you can see, towards the end of 2019, it actually improved quite dramatically, or at least quite considerably. And it was a structural upturn that was expected at the time. Then 2020, 2021, we all know what happened at that time when COVID came. So this is the big picture from 2015 to 2021. If we just then isolate 2020, 2021 in the next 2 pages. So if you turn slide, please. Are you on slide 14 now? Thank you. Slide 14 is showing first the fact that we had a very short spike just after COVID had entered or had appeared. And that's a very strange thing, because we had Saudi Arabia lowering the oil price, increasing the oil production. Prices went from $60 a barrel to $20 a barrel. So in spite of the fact that we had just COVID starting and consumption was going down, people were stocking up like there was no tomorrow, and they filled up their inventories. And during that short period of time, of course, the rates shot up very drastically, as you could see. So, but then if you turn to the next page, please, we just realize then the rest of it was just a big hangover that we've been talking about for years now. That, you know, there was a weak market, very weak market, because all the inventories were filled up to the brim. Demand had gone down because of COVID, and OPEC needed to adjust their production to match the lower demand. So there was basically very little oil to be transported by sea. And this was reflected in the tanker rates. So you can see it's below $10,000 a day. Okay, next page, please. Okay, same thing again, just showing in another way how quickly the oil consumption in the world deteriorated in 2020. Next page, please. No doubt this has had an effect on our financials. We showed a Q2 result of minus 88.4 Swedish. And against and that was the first half of the year, the first 2 quarters in total was minus 200 million, compared to, you know, with the spike of last year, we had a profitable quarter the same period last year. Okay, next page. So with the fact that 16 to 20, there was a weak market, 2021, we had still the bad market and large investments, and 2021 has started and really been poor for the first 2 quarters. We had financial challenges that made us come into a position with financial challenges. We communicated this to the market in our first quarter report back in April. Next page, please. And what we did announce at the time was the fact that we needed to talk to the banks, we needed to talk to the main owner, and we needed to come to a solution. And we have come to a solution, and we are presenting the actions for what we call a restart, if you will. We have a term sheet agreement with lending banks, where we've lowered the rate of amortization and new covenants. And we also need to have, with this new term sheet, with the bank's consent in order to pay dividend. And with this also comes a secured time charter of 5 years for all the P-MAX class vessels to Stena Bulk at $15,500 a day, with a profit sharing. So whatever the ships earn over and above 15.5, we share 50%. And we have also the possibility during the time to sell the vessels in spite of the fact that they are on charter. And in order to, so with that, we have, of course, we have our downside protected and we share the upside. We have started to sell vessels in order to increase our net liquidity, which was also part of the deal with the banks. Next page, please. Same page, all it says within, you know, this little stamp there, that it was unanimously approved by the AGM in August. Next page. Next page is just showing that we still not that one actually, you're still on page 21, please, thank you. It requires, amongst other things, still approval from the bank's credit committee. So we're not entirely done yet, but we expect to be done with this whole thing from within September. Now, next page, please. All of this is in order to strengthen our financial position, and we are well on the way to do it. And as I said, we just have a few weeks before we wrap it all up. Next page. is showing the fleet list and the status. And now, of course, the red bars are, showing or describing the fact that the ships are on fixed time charter. They have a fixed income, and we do profit sharing on top. Then we have still one Suezmax tanker, and we are still a few more months participating in some charter ins on the Suezmax tankers, which is outside of the bank agreement. Next page, please. This is just another way of showing or illustrating the same thing. Take a look at the market from 15 to 21. There's been spikes, there's been bad years. We have had an average. This is again the market in general of $11,000 a day. We're now going into a 5-year time charter at 15.5, and we share the upside with 50%. Okay, next page, please. This is just to show also, taken out of Clarkson Index, a long-term price trends, how bulkers and tankers are fluctuating in the market. The spot market, the general market goes up, the prices go up, and vice versa. And even if it looks like the tanker line is on the high side, but this is an index that goes back to year 2000. So I would say that we're now at the pretty low end of the valuation of ships. And there is, you can see historically there's been a fluctuation between 100 and 150. Okay, next page, please. Okay, so what do we think about the outlook? What do we see going forward? Let's put it as simple as we can and as summarizing as we possibly can do. Next page, please. What we first of all need is a good world economy. We seem to be having one. We seem to be having a world economy that is bouncing back. We're experiencing it now, and people are, generally speaking, expecting it to continue. That's good because that has an impact on the oil demand on the next page, where we can see that the 2020 was a low year. 2021 started off low. This is an average what we expect the year to be producing, and towards the end of the year we see a chance of reaching 100 million barrels per day again. 2022 is expecting to stay there as an average for the entire year. Okay, so what do we need in order to meet that demand? If you turn to the next page, please. Well, we need OPEC and oil producing countries to step up their production so that this could meet the oil demand increase. And we see it's coming, and it has started, and OPEC have decided to increase by 400,000 barrels a day per month. So for every month that goes throughout this autumn, we're having another 400,000 barrels a day, which is basically all to be shipped. So we are at the low end of the market right now, and we're expecting it certainly to come up with this extra oil to be shipped. Okay. I said before, if we turn to the next page, I said before that people were stocking up like there was no tomorrow back in a year and a half ago, spring of 2020, which you can see on the slide. It has taken quite a while to get rid of that overhang. Now there is no overhang anymore. We're at an equilibrium where you say this is the equivalent of the average inventories in OECD for the last 5 years. And we're even below that in some instances. So now, in order to not continue this inventory draw and to keep it at a zero level, we need the extra oil that I was pointing at before, and it's needed in the market. So that's fine. Next page, please. The flip side of demand is, of course, supply. And I've been showing this simplistic picture many times before. It shows that the net growth of ships is relatively low, which is a good sign. If we need more, if we have more demand coming up, and we don't have so many more new ships coming into the market. So the demand supply situation, we certainly are of the opinion that the demand side is increasing by a lot more than what the supply side is growing by. Okay, I think that comes to the conclusive slide, next slide, which is basically just saying why Concordia CCOR. From a market perspective, 2020, we've been talking about that. 2021, we see strengthening from second half. I know I've been saying that we should have seen it from June. We didn't. That was wrong, but things seem to be lagging, a quarter to that. But now we are seeing it. We see more cargoes in the market. We haven't really started to see rates to improve yet, but we see at least more cargoes coming back to the market to meet this extra demand that we just been through. And we are a firm believer of a structural upturn in throughout this autumn and 22 and onwards. We, Concordia, operationally functioning very well. A lot of investments gone into the ships to make sure that they can be out there and earn money during this upturn in the market in a good way. We have the time charter agreement. We have the possibility to share profits and to divest, and if we want, still a small organization, and we have the access to the companies within the Stena sphere. And it's not a big fleet that we're showing, but that we are a great cooperation with the Stena Bulk and sail in their various fleets and pools. So all in all, we have access to a critical mass and thereby having the chance to beat the market indices, as I showed before. So that concludes my presentation on Concordia Maritime. I'm happy to take some questions.
Thank you so much for an insightful presentation, Kim. My first question is, as you mentioned, you recently sold your 2 IMO 2 Maxes. Could you please give us some color on how you see the S&P market going forward and what premium your P-Max vessels might receive compared to a standard MR tanker in case of a sale? And additionally, do you plan to divest any of your remaining vessels in the near future? And will the proceeds from a sale be used for dividends or new buildings?
To answer your last question first, it's not firsthand. It's not for dividend nor new buildings. It will be to accelerate the amortization towards the new bank agreement. Then we sold the 2 IMO 2 class vessels. That is correct. We got quite a good price for the vessels. So we took that opportunity here and now, more so for the reason of needing to do it than not believing in the market. We do believe in the market. We do believe the tanker market is coming back. With that, also the second-hand prices. So you could say that you should have waited a year. Yes, we should probably have done that, but this was a necessity, so we did it now when we saw that sort of good price without disclosing what it was. Yes, we think there is a premium to P-Max in the S&P market too, because it does, and it goes hand in hand with the earnings capacity for people who could utilize the extra capacity. So whether that is 10 or 20%, then it's just a figure, but there is a premium to a P-Max class vessel in the S&P market.
Yeah, and it's all about timing in shipping, as we know. And environmental friendly and fuel efficient ships are becoming increasingly more important for regulators, customers, and investors. You said you're not thinking about any new buildings, but what do you think about investing in a new building in this time of cycle when the order book is around 6%, which is historically low? And in the long term, how do you see your fleet develop over time?
It is correct that the order book is, what you just said, historically low, 6%. 6% of the new orders compared to the fleet, but it has been historically high too. So I used to make that little distinction between historically low and historically high, and there has been in shipping throughout generations and decades a willingness to order a little bit too fast, too many ships, and that's been bad for tanker shipping in general. So I think it's quite good that if people could be a little bit more, holding back a little bit more in ordering new ships. We do not need. 6% is still 6%. If we have a growth of 2-3%, and the net growth of ships by 2-3%, it's kind of equilibrium. Yeah. So I don't think we need more ships. I don't think it's a good idea to order ships from that point of view, from the market point of view. I think we should all be refraining from that. I certainly buy the argument that for the future there will be a need for different engines, different fuel types, and all of that. We all need to contribute to lower emissions. There's no doubt about that. There are 2,000 MR tankers in the world right now. You can't just swap them out in a few years' time. It has to be gradual fleet change over the years. So all in all, yes, we need to have a better emission status on the ships going forward, or the ships that we order. But right now, there is no need to rush into that. And we are right now in a status or in a position where we just, I've been through how many bad years we have had behind us. We've been through that, and we've been working day and night over the last almost a year now in order to come to a solution. Now we have a solution. Now we go forward. Now we will start to build for the future, or come up with a plan on how we will look like in a few years' time. But right now, I don't have the exact answer to that. I know that we need to be divesting of a few ships. I know that we need to be investing in others in the years to come in order to grow the fleet and grow the company.
Yes, thank you so much for your answer, and let's hope we have bright times ahead. It's going to be exciting to see what happens. And if you don't have any further comments, then I think this is it for now. Thank you so much for your participation and presentation. And if you have any further questions, please reach out to me, or I'm sure also Kim are available to respond to your questions. Thank you.
Okay, thank you very much.